2-3 seconds more, I think.
Okay.
Yeah. Hello, everyone. A very good evening to all of you. International Council for Circular Economy welcomes you to the 10th episode of Season 4 of our Circular Chat series. The Circular Chat is an initiative by ICCE to develop and promote the idea of a circular economy and its related topics. This episode 10, and in this episode 10, we have our guest speaker, Mr. Manish Sharma, Head of India at ESG Book, with us. And the topic today is ESG in financial analysis. Hi, Manish. A very warm welcome to you on the Circular Chat.
Thank you, Surabhi. And yes, a very warm Friday to everyone.
Yeah, thank you. Thanks a lot, Manish. So let me introduce Manish to you. Manish Sharma is currently the head of India at ESG Book, erstwhile S-Ray, a pioneer in sustainable finance and ESG data analytics and research. He has 2 decades of progressive experience in strategy, consulting and research, people and knowledge management, and digital transformation. He is an MBA in finance and a mathematics graduate from St. Stephen's College, both from University of Delhi. Manish has earlier been a VP at Genpact, Learning and Knowledge, lead HR at Ashoka University, which is India's leading liberal arts university, and founded global teams, managed operations across research and consulting practices for 14 years at McKinsey & Company. Manish, thanks for joining us and supporting ICCE in its capacity building initiative. So today I have a few questions for you ready.
Sure. The topic
so Manish, So as per the GSIR review 2020, global sustainable investment or ESG investment has reached $35.3 trillion in the 5 major economies at the start of 2020, an increase of 15% in 2018 to 2020 and 55% between 2016 to 2020. How do you see this change in India?
I think first things foremost, India is still very nascent in its journey of sustainability and the whole transition that we are talking about, climate change and how to abate it. And fortunately, now we have a flag post. So 2070 is the net zero target that India has given to itself at the last COP meeting that happened late last year, where our Prime Minister made that announcement of 2070, being the target for us. Seems 50 years or 5 decades ahead. Nonetheless, we have to start now. I think that's the stark reality. So I mentioned that India has just started its journey, right? I think it was ADB, Asia Development Bank, that mentioned that the numbers that you provide, something similar, that for 2020, the numbers were close to 40 trillion of investments globally. I think India is still getting started. So some of the numbers that at least we can talk about for India that come from, let's say, the Climate Bonds Initiative, they say that the sustainability bonds issuance in India was $20 billion. So $20 billion early this year, right? Or at the end of 2021. And it was 2015. I recall that it was Yes Bank that launched India's first green bond for a renewable energy project. So something that started in 2015, in 2021, we're close to $20 billion. And as for the assets under management, which are ESG linked, the mutual funds from, let's say, SBI, Kotak, Axis, etc., together they manage about $1.5 to $2 billion. That's the number which earlier came this year from Morningstar. So India's journey has just started, right? I think that's first and foremost. And we are one of the biggest players, so as to say, in terms of ensuring that the world does not warm to a very dangerous levels. Then I recall the McKinsey study that also came out, right? That in terms of requirements, we would require about $12 trillion all the way till 2070 if we are to reach our targets. Now, $12 trillion is a huge target just for climate transition and all the sustainability linked aspects along with it. The number that came from the getting Asia to net zero was $10 trillion specifically for India. So we are looking at, numbers which are in trillions of dollars already over the next 3 to 5 decades, 2050 to 2070. If those are the targets that we can say are the soft target and the hard target. And we are somewhere around $20 billion as of now. There was another research report that mentioned by 2026, which is over the next 5 years, perhaps we would estimatedly be around $125 billion mark. So from 20 to 125 billion. So those are the numbers we are looking at, but they are still very small, a few billions from 20 billion right now to 125 billions. But I think what's staring at our face is much starker, right? 10 to 12 trillion dollars over the next 5 decades. And just to put things in perspective, India is a $3 trillion economy. So we are talking about a number which is 3 to 4 times of India's GDP required over the next 3 to 5 decades. And so that means that whatever we are doing right now is insufficient. I think that's what the most recent meeting that happened, COP27, everybody's talking about that very recently, a couple of weeks back in Egypt. That the whole thing about financing, towards this climate transition is, and more so for developing economies. I think that's what everybody globally has to work towards. And so the numbers will only increase for India. That's a given. And not just linearly, but exponentially, right? They have to.
Yes, we need that exponential curve actually for India to achieve those targets within those next 4 to 5 decades. Absolutely. So, Manish, during the last 2 years, the highest gain was in Canada, where sustainably managed assets increased by over 48%. From 2018 to 2020, the United States ranked second after Canada in the ESG investment growth with a 42% increase, followed by Japan with a 34% increase. So what trends are we seeing in India, especially after SEBI regulation? Though you have already told some numbers, but especially when we see that the SEBI regulation has come and now how these numbers have changed.
Well, in India, I mentioned that our journey actually has just started. So even the baseline is not clear, right? I mentioned that in terms of total green bonds or sustainability social bonds issuance, our total right now is perhaps $20 billion, right? So the baseline has still become concrete only in the last 3 to 5 years. And from here, now we can say what is required. And then you mentioned Canada, and I think we all know that Canada is a natural resource-based economy. It's all about metals, mining. For India, we know 70% is a rural agrarian economy still, right? So there will be dissimilarities in the approaches, right? That's for sure. And some of the numbers were, again, the per capita CO2 emissions equivalent for India is close to 1.8. It is 15 for US. It is 7 for China, right? So because of our scale, of course, we are in the top 3 or top 5 emitters, but the per capita numbers are still something which, if we are able to address it sooner, I think we should be able to manage. So that's a good thing that at least we have with us. 2012, SEBI did the first things first, right? They brought the whole business responsibility reporting into the picture, started with about 100 companies. And we know currently that 1,000 companies are to be covered with the upgraded BRSR, the business responsibility and sustainability reporting thing. It's optional this year, but I think it gets mandatory from next year. So I think that has taken a decade, right? In 2012, the BRR came, and in 2022, now the BRSR is there. In between, I did mention that Yes Bank came with the first green bonds in 2015, and in 2017, SEBI also launched a green bonds guidelines. So the starts have already been made. Some sort of a regulatory architecture is being provided, and earlier this year, the consultation paper was released by SEBI for ESG rating providers like us, right? That how do entities like us do a much better job? What's the criteria? What are the parameters that they should be working with? What are the requirements, technical, regulatory, etc.? And so hopefully the ESG rating providers will do their bit also, just to ensure, of course, working with SEBI and the exchanges, that the data which is out there in the system is also, transparent, comparable, and easily accessible, so that at least the investors, retail institutions, everybody are able to take an informed decision and really think about sustainability from a long-term perspective also. So yeah, SEBI is doing it, but now the institutions have to follow, and I think the corporates have anyways taken a cue, right? Reliance just mentioned $80 billion that they will invest over the next decade or so to their green initiatives. Even Indian Oil Corporation said that while India is having a 2070 target for net zero, we will go with a 20461, so a much more accelerated one. So it's good that the corporates at least are taking on to themselves that while there is a hard deadline perhaps or some flag post, but they can do much better, right? And so we would want to see SEBI working with the other exchanges and of course with other market participants to ensure that the whole absorption of all this happens much more faster. I think then only we'll be getting into a meaningful momentum towards the targets that everybody's working towards. And that's my sense.
Yeah. So there is a momentum, but we need to actually pace up. And the corporates which are getting involved, they have to bring that ideal, they have to create some ideals so that everybody can follow, I think. So now globally, ESG or sustainable investment holdings are expanding. We are seeing this. So this is owing to a fundamental shift in the way sustainable investment assets are understood in this zone. So can you shed some light on this, Manish?
I'll try to. As you mentioned that if the world itself is still grappling with so many standards and frameworks and definitions, I'll try to just put an angle to it. I think first things first, everything is to do with sustainability, right? And then sustainability as an overarching theme, it all includes actions that we do towards ensuring that the planet is really sustainable and is able to sustain the population. The natural resources are there, which are getting circularly, consumed. And of course, the regeneration is happening at a pace that nothing gets broken down or disrupted from the system as such, right? So you have all these things like ESG investing, socially responsible investing, and then you have impact investing, right? I think the intent for all is towards same, right? Making the world a bit more better place and sustainable. So in terms of that, the definitions, standards, frameworks, I think now with the whole setting up of the International Sustainability Standards Board, ISSB, that includes a few other entities in the past that have been doing things like the Carbon Data Project and so on and so forth. I think that's a move towards ensuring that there is some consistency in the system, a common approach that people can work towards. And I think already we have seen what UN is doing through its PRI, the Principles of Responsible Investing. It has about 5,000 or so signatories now, and in total about $120 trillion plus of assets with them. So with that sort of a scale and with some framework coming from, let's say, ISSB and all, I think there will be a common understanding, at least as to the definitions, right? As to what means what is required to be done, and how perhaps to capture those things. As in our business is built on the premise that what you can measure, you can manage, right? So as long as the data which is out there getting published from companies is authentic, it's validated, it becomes a bit more comparable, it's a bit transparent and accessible to the end users, I think things will be much more fluent, in their movement through the supply chain, get finance moving into sustainability, and then the definitions of sustainability itself, the disclosures which the corporates make, this whole talk of greenwashing, right? So greenwashing on one side, and then there's hyper activism on the other side. So we have seen extremes also, but truth is somewhere hopefully in the middle. So the faster the truth is there, people look at the truth, and then the truth becomes the North Star, and then the targets are met and achieved. I think we are moving towards the right direction. And so some of these things that I talked about regarding this ISSB formation, what SEBI has been doing so far, will only get method to madness, as we can say. So hopefully things will be much better over the next few years.
Yes, absolutely. So what is the relationship, Manish, between sustainability risk and financial performance? And do you think ESG reporting can alone improve financial performance?
So I think I'll take the second question first. I don't think that ESG reporting will solve everything, right? It won't solve everything. And when ESG reporting won't mean that definitely there will be a impetus to your financial performance also, and hence investors, you will suddenly become the darling of the market, capital markets and investors alike. So I don't think it's that booster shot that perhaps somebody can. I'm sorry to use that analogy with the COVID thing, but yeah, not the booster shot at all. So, but yes, I think we did an earlier study with Oxford a few years back, and we saw that how 80 to 90% of the studies done so far in this respect do mention that, or have a conclusion that strong ESG policies do ensure that there is a lowering of cost of capital that naturally impacts the financial performance and the business performance. It also makes you a bit more amenable to the investors. You face less activism also if you are being proactive on the ESG front or sustainability topics. The investors that come in are, I think it was NASDAQ also that supported this, that the investors are, or the ESG investors are, tend to be much more stickier also. They know that they are in for the long term. They are in for a noble purpose, which is sustainability of all things. There will be some long-term aspects to it. And so they tend to be a bit more stickier. If you have strong ESG principles in place or ESG values, then you become a magnet for talent also. People tend to stick to corporations that are having their heart in people, right? Not profits, as in not just profits, but profits and people. And of course, you add the third P to it, the planet part, and we are talking about the triple bottom line concept, right? And that's precisely was the theme I tried to capture in one of my articles last year, that how sustainability is all about, people, planet, and profits, and a nice balance between the three. And that's precisely what I think is the need of the hour also. So yes, the correlation is definitely there, right? The extent might be questionable, or the anecdotal evidence can be contrary also, depending on, let's say, factors like the COVID thing or a Ukraine war, right? Sometimes the capital markets may not be the right reflection of what's the thing, but the underlying principles or the philosophy is precisely that if you have strong ESG principles in place, things like a lower cost of capital, a better business and financial performance, and typically good returns to your investors and shareholders also, more from a long-term returns perspective also, and from a social perspective also. I think those returns that you get tend to be a bit more noble. So that thing is very much there. I think one of the examples that we can talk in this respect would be, I would say, ITC from an Indian perspective. We know it's a predominantly tobacco business, right, for last few decades. But in the year 2000 itself, they started something of reaching out to the farmers that they were working with. not just for their raw materials production. They have a paper unit also besides tobacco, and of course, some other things also on the FMCG side. But they decided to do something for the farmers. And what they have done is they have set up the e-Chopal project. I think some of our audience would already know of it. The ITC's e-Chopal thing is very significant, because I think by some means it is, or by some measures, it is the world's largest, integrated rural digital initiative or an architecture. It links about 4 million farmers. They have ready information on their smartphones or apps for the whole of supply chain from production to processing. They can monitor weather trends and everything. They can discuss and form forums among themselves so that they are able to negotiate better. So in terms of pricing, it helps them. In terms of weather patterns, it's helpful to them. And yes, of course, in terms of just the supply chain management, it's really helping them. And they have those kiosks and the sanchalaks. The whole architecture is pretty beautiful out there. And they thought about this 2 decades back. So I think that's one of the examples that really comes to mind when we are talking about, and hopefully, things like the share price would not have been impacted that much, or maybe it wasn't dented that much because of the tobacco thing. But some of these CSR activities which ITC is up to, they are able to, still have the sway in the market. They are still a part of the top 30 blue chips in the country, right? So, and of course, it would have helped them with their raw material procurements, etc., and costs and everything. So that's one of the examples that at least came to my mind from a historical perspective that goes, all the way back to states.
Right. So definitely we see that when the ethics and the ideals are there of ESG sustainability thing is there, then there is some financial gains, though there are some contradictions or exceptions as well. But definitely it leads to some financial gains over a period of time. Definitely it is there. So ESG practices improve business performance in multiple ways. Companies could achieve wider markets and develop existing ones with a solid ESG proposition. This is being said, and it also helps in increasing cooperation among investors. So do you have any case studies or examples that you would like to quote here?
So I think one of the things which I mentioned, one of the NASDAQ studies was, or even from the perspective of ESG strategy having an influence on business and performance, business and financial performance, we saw how the activism can be kept at bay, right? If you are having a proactive ESG policy, or the fact that investors are stickier, they stick longer if you have sound sustainable practices, green business or operations, and they are there for the long term with you, right? And so that is something that has been seen in some of the financial institutions which are there in the market. We also talked about how Reliance is doing the same, right? We know it's an oil and gas company. It's a fossil fuel driven company. But the fact that they have an IT unit now, a retail unit now, I'm talking about Reliance Trends and Reliance Fresh and Geo, of course. So they are trying to diversify, but at the heart of it, they are still, a fossil fuel player. But the fact that they are going after green operations in a big way, they're trying to say that, yes, now that India has a flag post of a net zero target, they'll do their bit towards it. And for their own sustenance, they will invest $80 billion, in green projects and initiatives. So that is something that can be taken on as an example, right? I'm not just talking about, let's say, the last 1 or 2 year performance of Reliance's share price, but the fact that it has seen less of an activism play right now, or the noise against it, as it used to be the case 5 years ago or a decade ago. I think the corporations are transforming. We looked at the ITC's example also, right? What they have done, I think, through the years, through their various CSR initiatives, and of course, the e-Chopal project that we talked about, is also a case in point. So definitely there are those examples out there. Few as of now. I would say anecdotal. So it's not that the whole industry is going towards it in one way or the other. And plus, we are looking at things like environment and climate. We are singling out that in a big way, but ESG is about society and corporate governance also. So in terms of corporate governance, SEBI's stance is there since last decade, right? Business responsibility. So I think in terms of what the changes have happened in the India industry in terms of diversity, inclusion, minority shareholder rates, those things are having various examples, right? Not just the Sensex top blue chip companies, but even listed and unlisted ones, other ones. So I think as a theme or a trend, the whole ESG thing is definitely catching up in India. And we need to just build on this momentum, snowball it, and ensure that you hit the targets 2030, 2050, 2070, whatever those are.
Absolutely. So we have good examples, but they are very few, as you have mentioned about Reliance and ITC here. So there are ideals which other corporates can follow, and we are hoping that more and more companies and corporates get into the ESG domain, and they start looking at it they'll start looking at its bigger picture as well. So it was a very insightful session with you, Manish, today, and thanks a lot for being here with us. And I would also like to thank everyone who was present here for this live session. And if you have any queries regarding this topic, do write to us on info@icce.com. Once again, thank you, Manish, and thank you for joining us. We'll be back at the same time next week. And if you don't want to miss out on any updates or future conversations, do follow our social media pages and subscribe to our YouTube channel. Thank you. Have a good day. Bye-bye.
Thank you, Surveep. Thank you, ICC, for this. Pretty interesting. I love the questions, and I think the topic is very much relevant. So, just think about people, planet, profits, and what you can do towards it.
Sure. Thanks a lot. Thanks a lot, Manish, for your time.
Have a good weekend. Bye.
You too. Yeah. Bye-bye. Yeah, Manish.